But it's a very good question, and it's what we focus on all of the time. And
We're trying to improve.
And we hope we see you back here for your fourth next year. Becky?
This question comes from Stuart Boyd, who's a chemical engineer from Australia. He says, currently Berkshire would be incredibly difficult for an activist investor to target because, number one, Warren, your ownership stake is large. Number two, shareholders appreciate the business is more valuable operating under the Berkshire umbrella rather than being sold off in pieces. And number three, the sheer size or market capitalization of Berkshire is an entry barrier for most activist investors. Warren and Charlie, after your ownership has been completely distributed, will Berkshire be more vulnerable to activist investors? I'm guessing this isn't something that keeps you up at night, but thought it was worth asking.
No, it's going to happen quite a few decades after my death. I don't think I'll be bothered much by it.
Well, anything can happen. It's a low probability. It can't happen for a lot of years in terms of the way my stock gets distributed and in terms of the way other stock is held. But in the end, Berkshire should prove itself over time. There are no perpetuities. It needs to deserve to be continued in its present form. It has a lot of attributes that are maximized by being in one entity, which people don't fully understand. They think if you spin off something that would command a high PE, that therefore value has been unlocked, which is totally nonsense. I mean, it's already built in. And one day out, you might have an extra 3% or 5% in price, but over the years, we want to keep the wonderful businesses. But eventually, I think the culture will remain one of a kind. I think that we will be able to do things other people can't do. I think that the advantages of having them in one spot will likely be significant over time. And if that happens, no activist is going to take it over. And if the model doesn't work for some reason over a long period of time, then something else should happen. Charlie?
Nothing more.
Okay. Jay?
This question is on GEICO. Progressive is gaining the most market share among the major auto insurers based on its presence in the direct and independent agency channels, as well as now bundling its auto and homeowners insurance coverage. How does GEICO plan on responding to competitive threats so that it can retain its place as the second largest auto insurer? I was hoping we could also hear on this topic from Ajit or GEICO's management. Thank you.
Okay, the Progressive is a very, very well-run business. GEICO is a very well-run business, and I think they will, for a long time, be the two companies that the rest of the auto insurance industry has trouble not losing share to. But there's, I think I've always thought for a long, long time, Progressive has been very well run. They have an appetite for growth. Sometimes they copy us a little. Sometimes we copy them a little. And I think that'll be true 5 years from now and 10 years from now. And we sell substantial amounts of homeowners insurance. We have an agency arrangement with that. We were in the business of writing it ourselves until Hurricane Andrew, when a decision was made. We didn't control it then, but a decision was made that the homeowners essentially, you could lose as much in 1 year as you made in the previous 25 years, and the float isn't as large. So we became a company that placed our customers' desire for homeowners with several other large and solid organizations. the big thing is auto insurance. And we grew in the first quarter about 340,000 policies net, which will look quite good compared to anybody but Progressive. And that was quite a bit more than last year, but not as good as 2 years ago. And the combined ratio, the profit margin was in the 9-point area. So I feel extremely good about GEICO. I mean, what has been built there by Tony and his people is perfect, but I would feel fine. We don't own any Progressive, but I think that Progressive is an excellent company, and we will watch what they do, and they will watch what we do, and we will see 5 years from now or 10 years from now which one of us passes State Farm first. Charlie? Oh, and G, would you like?
Well, the underwriting profit is really a function of two major variables. One is the expense ratio and the other is the loss ratio, without getting too technical. GEICO has a significant advantage over Progressive when it comes to the expense ratio, to the extent of about 7 points or so. On the loss ratio side, Progressive does a much better job than GEICO does. They have, I think, about a 12-point advantage over GEICO. So net-net, Progressive is ahead by about 5 points. GEICO is very aware of this disadvantage on the loss ratio that they are suffering. And they're very focused in trying to bridge that gap as quickly as they can. They have a few projects in place, and sometimes GEICO is ahead of Progressive. Right now, Progressive is ahead of GEICO. But I'm hopeful they'll catch up on the loss ratio side and maintain the expense ratio advantage as well. Thank you.
GEICO has gained market share, essentially. I'd have to look at the figures for sure, but virtually every year since Tony took over. And I would bet significant money that GEICO increases its market share in the next 5 years. And I think it will for sure this year. And so it is a terrific business. And Progressive is a terrific business. And we'll, as Ajit says, we've got the advantage in expenses, and we will have an advantage in expenses. And then the question is are we? They have a very sophisticated way of pricing business, and the question is whether we give some of that 5 points back or 6 points back, or in terms of loss ratio. And we're working very hard at that, but I'm sure they're working very hard too to improve their system. So to some extent, it's a two-horse race, and we've got a very good horse.
But Warren, in the nature of things, every once in a while somebody's a little better at something than we are.
You've noticed?
Yeah, I've noticed.
Yeah, I'd settle for second place in a lot of the business. Okay, station 11.
Mr. Buffett and Mr. Munger, thank you for taking my question. My name is Feroz Qayyum, and I'm from Mississauga in Canada, and now live in New York. My question is how to best emulate your success in building your circle of competence. Given the environment today in investing is a lot more competitive than when you started out, what would you do differently, if anything at all, when building your circle? Would you still build a very broad generalist framework? Or would you build a much deeper but narrower focus, say, on industries, markets, or even a country? And if so, which ones would interest you? Thank you.
Yeah, well, you're right. It is much more competitive now than when I started. And you would, when I started, I literally could take the Moody's Industrial Manual, the Moody's Banks and Financial Manual, and I could go through page by page, and at least run my eyes over every company and think about which ones I might think more about. It's important. I would just do a whole lot of reading. I'd try and learn as much as I could about as many businesses, and I would try to figure out which ones I really had some important knowledge and understanding that was probably different than overwhelmingly most of my competitors, and I would also try and figure out which ones I didn't understand, and I would focus on having as big a circle as I could have, and also focus on being as realistic as I could about where the perimeters of my circle of competence were. I knew when I met Lorimer Davidson in January of 1951, I could get insurance. I mean, what he said made so much sense to me in the 3 or 4 hours I spent with him on that Saturday. So I dug into it, and I could understand it. My mind worked well in that respect. I didn't think I could understand retailing. All I'd done was work for the same grocery store that Charlie had, and neither one of us learned that much about retailing, except it was harder work than we liked. And you've got to do the same thing, and you've got way more competition now. But if you get to know even about a relatively small area more than other people do, and you don't feel a compulsion to act too often, you just wait till the odds are strongly in your favor. It's still a very interesting game. It's harder than it used to be. Charlie?
Well, I think the right strategy for the great mass of humanity is to specialize. Nobody wants to go to a doctor that's half proctologist and half dentist, you know. So the ordinary way to succeed is to narrowly specialize. Warren and I really didn't do that, and we didn't because we prefer the other type of activity. But I don't think we can recommend it to other people.
Yeah, there was a little more treasure hunting in our day, and it was easy to spot the treasure.
We made it work, but it was kind of a lucky thing.
Yeah.
It's not the standard way to go.
The business, at least I best understood, actually was insurance. I mean, and I had very little competition. And I went to the insurance department in Harrisburg, Pennsylvania. I remember one time I drove there just to check on some Pennsylvania company, and this is when you couldn't get all this information on the internet. And I went in and I asked about some company, and the guy said, "You're the first one that's ever asked about that company." And there wasn't a lot.